There's this mysterious new large seller in the market, and we don't know who it is. That is a mysterious thing because that's not somebody doing price discovery. You know this. That's somebody who's clearly intent on setting prices, not discovering prices.
Recently, the president of Chevron and Exxon are warning what's going on at the refinery level, the throughput. They're just, we could have some shortages in diesel and jet fuel here.
We're at like 96, 97% capacity utilization. Nobody's maintaining, which means we don't have much margin for error right now.
You're watching the Financial Sense Newshour, financial news for high net worth investors and strategists. When it comes to the biggest investment trends and understanding the market, we've been delivering the insights you need for over 30 years.
Well, the price of oil has been going up and down like a roller coaster. The president hopes by election time the prices will be coming down, he tells us. I'm not so sure that's going to happen. Joining me on the program is Chris Martenson from Peak Prosperity. Chris, you were on Tucker Carlson talking about Sunday future markets. Let's talk about that because I'm seeing the same thing that you're seeing.
Yeah, so, it was even noted early in March in Financial Times. They had an article and they were talking to one of the big traders at one of the big oil bourses. And they said, there's this mysterious new large seller in the market and we don't know who it is. And so if anybody's been in the biz, everybody knows everybody, right? It's not like there's a billion oil traders out there. The big houses all know each other. They have trading footprints. They kind of know each other's patterns. There's a whole rhythm and cadence to it. And then suddenly in March, this new mystery seller stepped in. Wink, wink, we can all kind of guess who that might have been. And so that presence has been there for a while. And we noted, Jim, it's the same thing we saw in silver markets and many other commodity markets for years. You get into your overnight, very thinly traded markets, 2:29 in the morning, and in a single 1 minute tick, you might see, 3,000 or 4,000 oil contracts suddenly get sold. And the normal volume would have been, say, anywhere from 50 to 150 contracts in that market. So we're talking 30, 40 times volume and always, always, always to the downside, right? And so that is a mysterious thing because that's not somebody doing price discovery. You know this, right? If you were a legit trader or you're an oil company and you really actually want to future hedge some product, you don't go out there and just like an elephant stepping on some china, just crush it into a 1 minute tick market 2 a.m. So that's somebody who's clearly intent on setting prices, not discovering prices. And they've been very intent on discovering or setting prices at a much lower level. And it's pretty open secret now. People see it. We're all commenting on it. And I, for one, think it's a very bad idea. I do not believe in central planning for markets. I think that you need the wisdom of the markets to do things. And the consequence of that is we're seeing oil inventories all over the world start to really just continue trundling on down well below their 10-year averages. That becomes trouble sooner or later.
Yeah, because you have Cushing below 20 million barrels. And I had a chart of that on my Bloomberg in the price of oil. Anytime Cushing got below 20 million, you always saw a spike in oil. You're not seeing it this time. We're still below 20. And I'm trying to think what the SPR, we're down to very dangerous levels. So, and people don't realize that is sort of cushioned what we might have experienced along with some of the shenanigans we're seeing in the futures market. But sooner or later, this is going to catch up with this. And Chris, I wonder if you want to comment. Recently, the president of Chevron and Exxon are warning what's going on at the refinery level, the throughput. They're just, we could have some shortages in diesel and jet fuel here.
Yeah, diesel's the real conundrum here. Of course, diesel's what really makes the world's economy run, right? That's where all the trucks and the mining equipment. I'd say a significant fraction of things that move from A to B get there with diesel, and then jet fuel is the second thing, and also shipping fuel, right? That's the bunker oil, also in short supply in lots of the Pacific Basin. So this is going to be a problem. Yes, the CEOs are saying, hey, we have a huge tightness here. And of course, it's not just that it was all this stuff going on in the Iran war and the Strait of Hormuz and now the Strait of Bab el-Mandeb. It's also the fact that Ukraine on March 2nd really started to intensify its attacks very successfully on Russian refiners. And so Russia is now a net importer of diesel instead of a net exporter of about 1.3 million barrels a day. it's a huge reversal in fortunes for the diesel market. So that's where we're seeing extreme tightness. And I think what the oil company guys are really talking about, Jim, is that every refinery we have is running like flat out. We're at like 96, 97% capacity utilization. Nobody's maintaining, these things all need maintenance, things break, you have to shut down every so often. They're all running flat out right now, which means we don't have much margin for error right now.
And the other thing, too, if you take a look at how this peace deal is going to unfold, it looks like Iran wants to charge a fee, a transit fee, to get through. So even if it ends and we have a peace deal and they open it up, I don't think we're going to be better off than when we started the war, before we did.
Well, I think it's even a little bit more complicated than that. You're right, of course. Iran is very stubbornly stuck to the idea that they're going to charge a toll. They say that they're negotiating with Oman to strike a right level. They're not including the United States in those talks right now, though, right? They're not talking to us, apparently. But that, even if they get the strait opened under some terms where, a fee is charged, even if the United States allows that, then you have the rest of the MOU outstanding. And there were other conditions that Iran wanted, including repayment and lifting of sanctions and all kinds of other things. And so if you can't come to terms around that, that's what you need to get to before you can even get to what we call a true peace deal. Any competent lawyer will tell you, never sign an MOU. They're not, it's a lot of downside, not a lot of upside. So even the MOU was just a placeholder to talk about how we were going to have the talks that were going to lead to a legitimate certified peace deal, which would be some kind of a treaty, some set big fat documents with all kinds of conditions and things with enforcement mechanisms tied in. So I would say we're still months away from that. And that's if and only if Trump doesn't just get frustrated here and start bombing again.
And if you look at the markets this year, it's been very difficult to navigate because like one day we're bombing, the next day there's a peace deal. And anytime I've noticed that we've gotten up to I think we got up to 92 on WTI and we hit 100 on Brent, and all of a sudden the bombing stopped. So, it's one day we're bombing, the next day it's a peace. And it's very hard to navigate when it changes geopolitically like that on almost a weekly basis.
Well, it is. And of course, the other pattern everybody's noticed is that bombs tend to fly on Friday and Saturday, and sometime mid-Sunday before the market futures open, there's a deal on the table. And I don't know how many of those we've seen now, but it's obvious that Trump cares a lot about the markets. It's obvious that he's jawboning and coordinating military activity around market hours, which is a very new thing to have it be that blatantly done. I think it tips his hand because now Iran knows what he cares about. And so they could, if they chose, to start timing things against that if they wanted to. And so far, they haven't really wanted to, I don't think. But they've laid it clearly on the table. If a next wave of attacks comes, that includes things like power plants, oil infrastructure, water, desalination plants on their soil, they're going to dial in and they're going to hit the rest of the Gulf assets around there that they can reach. And of course, they've shown they can not only reach this stuff with high precision, we can't stop them. The latest generation of missiles, I think, have almost 100%, a very high percentage sneak through rate. Our Patriots and our THAADs are just not up to the task of this latest generation of missiles they got.
And the statement is always made, well, we've knocked out their military, we've sunk their boats, the Navy's gone, the Air Force is gone, and yet they keep flying missiles and drones. So apparently they're manufacturing, or they have them hidden somewhere that we are not getting to because they keep doing it.
Yeah. Well, they have obviously their long-range ballistic missiles have got very hardened silos and facilities for those. But every day for the past 2 weeks, I don't think there's been a day, maybe one, but almost every day where we saw Iran actually hit tankers or ships that were trying to, sneak through the Strait of Hormuz. And they're hitting those, Jim, now with they have these missiles that are mounted on a truck. You just drive a truck out of a garage, point it, and off they go. And very, very hard to defend against. And most embarrassingly, they've actually hit a number of tankers that were under full U.S. escort, where we had planes in the air, ships down, and we couldn't stop these things. Very difficult to stop these missiles. So I think it's also fair to say that warfare has really changed. And I'm getting I knew that watching the videos coming out of Ukraine with Russia, But watching the United States also struggle with missiles and drones also struggle with missiles and drones, it's real eye opener. I think a lot has suddenly changed here.
Yeah, because our missiles are multi-million dollar missiles and we're going after what, 10, $20,000 drones?
Hmm.
Multiplication over that over a long period of time doesn't add up for at least our side.
No, it's really asymmetrical right now. And so the drones too, because they can do something called saturation warfare, where you send 200 of these things in. You're going to have a hard time spotting them all and then actually knocking them all out. And all they have to do is sneak one or two through into some very sensitive area, and then you have problems on your hands. So this makes it really tough now. I actually think this has a wider implication beyond what we're seeing right now. But it's clear to me we don't have a good military solution for Iran that involves flying a few more sorties, dropping a few more bombs. I don't think that does a thing at this stage.
Well, let's talk about where we are right now. We've lost, what is it, several billion barrels of oil as a result of this war, and that's
Hmm.
something we're not going to make up. Now, prior to this, the IEA was putting out the oil glut story with the missing barrels, where they were projecting, I think we were what, 2 million barrels a day oversupplied or something like that. Well, if you're doing that, it never showed up in inventory anywhere. So the
Correct.
so the market has bought this idea. Well, the reason the oil's down, there's a glut. Obviously, there's a glut out there. And I think people like yourself and myself look at this and we don't see it showing up in inventory, certainly not now after what we're seeing at Cushing, the SPR. So when does this catch up? Because you can't keep, if you suppress the price and you keep demand high and you're not getting the supply, you've got a problem here.
Yeah, that's absolutely right, Jim. So oil's very complicated, but in one way it's simple. It's the old PQ chart, which is price, quantity, and then supply. And so the price is supposed to be where supply and demand balance out, right? And the problem is if you hold price too low, which I think is happening here, well, then demand is too high relative to supplies. Now, if that was true, we would expect to see falling inventories, and that's exactly what we see, right? So you mentioned the SPR is down about just about 302 million barrels right now, if we can believe the figures. But when we look at the big four in the United States, which is commercial inventories of crude plus the SPR plus distillates, which would be kerosene and diesel and gasoline, you look at those four things together, it's just going down and down and down and down. We have not been at a level this low in my data series. You got to go back to like the 90s to find levels this low. So that means that our total number of days of supply is dwindling pretty rapidly. And then you go over to the demand side. Okay, they have some way of tracking car miles driven. Flights are great because flight trackers are, we humans track flights obsessively. I use flights as a pretty good proxy for instantaneous economic demand, right? Because it's not just people taking trips and humans, it's also the cargo planes. And you add up all the flights, and when you see recessions or you see demand dip, you see a dip in the flights. Nope, they're up 2.9% year over year. And that's globally as well, also up. So we're not seeing the demand shortfalls. That means the price is keeping demand pretty high. What we are seeing is we're seeing inventories just get tanked here at this point in time.
And you have to wonder when this finally catches up. Is it 2 months? I'm sure the president hopes that if it does take place, it's after the elections, because it seems to me that there's a big effort to keep the prices down prior to the election because nobody wants higher gasoline prices. I mean, you talk about something that affects everything in the economy. Think of the diesel trucks that take goods to the store, transportation to work, airlines even bringing goods, or ships bringing in goods. All runs on oil.
Yeah. Well, right now, if we look at the crack spread, which is the difference between just a barrel of crude oil itself and then how much the refineries are selling the products for on the other end, right? They should get paid for performing that valuable service, separating the oil into its things. They crack it into its units. The crack spread's really high right now. It's around $80 for a barrel of diesel, which means that the normal crack spread would be 20 to $30. That's the normal VIG you would get for performing that service, but now it's 80, so it's $50 higher, say, than it normally is. That's actually how much we're paying at the pump right now. Is like oil price, which is the headline number. Hey, look, it's only 75, but it actually we're buying it at the pump as if it's $50 higher than that which would be $125 a barrel. So that's the reality of it right now. So when you look at the products versus the price of crude, the product is where I don't consume crude. I consume gasoline and diesel and jet fuel, right? So I think that's where we have to keep our focus right now. And of course, as you mentioned, Wirtz from Chevron was just out the other day saying we have a real problem. We have really tight supplies of this stuff right now, and for diesel, and this could become a problem.
You just wonder how long they can keep this going, because at some point, as you mentioned, refiners have to go through routine maintenance. They gear up for gasoline for the summer driving season, then heating oil for the winter season. And in between then, they do maintenance. They're not doing that. They're pushing everything they can out the door with everything they have. But once again, I pay attention to Exxon and Chevron. They're two of the largest integrated oil companies. They run refineries. And when they're saying that, and they have been saying things like that since this war began.
Well, yeah, and they do know their business pretty well. So we've never seen, let's just be clear, we've never experienced an energy shock of this magnitude ever, right? And again, it was Russia and the whole thing going on in the Gulf. We're missing millions and millions of barrels per day. So even if the IEA was right and we had a 2 to 3 million barrel per day surplus, like they said, I don't think we did. I think it was closer to 500,000 barrels per day. That's based on inventory numbers. So it was more or less balanced, maybe with a little nudge towards being oversupplied, but it was not swimming in oil. And then when you all of a sudden take out that many millions of barrels per day, this whole thing should have just flown apart. And it didn't for one reason only. China, for reasons that are still mysterious, I'm sure we'll find out eventually what they asked for, they dialed back their imports by like 40% and held it there for a number of months. And if they hadn't done that, this is a whole different ballgame.
But, I think they anticipated something like this. I think I read somewhere, Chris, they had like 100 days of inventory that kept. But, eventually that is going to be run down too. So they're going to have to be back in the market if they want to produce goods.
Well, they will. And so it's kind of a mystery, though. I struggle. Like, why would China willingly do that? Because on some level, we're competitors. And I think you could make an argument that they might want to see us have to sort of struggle with the consequences of our decisions, but they didn't. But remember, Trump went over there with a bunch of CEO honchos, right, from all our big companies in May 13th. And right before that, it was in April when China started really dialing back its imports, and it really went all the way through May into June and kind of hung there for a while. So I'm wondering if that was the quid. Hey, Trump, because there must have been all this advanced stuff that happened right before the meetings. Just fly there on May 13th and start the meetings. A lot of phone calls happening beforehand. I have to wonder if there wasn't an offer made. So the quid was, hey, we'll bring our imports back down, and we can really help modulate the price. What do you think the pro quo was?
Taiwan.
I think too.
Yeah, there's something going on there. Let's talk about if these inventories are dropping as they are, and I watch Cushing, I watch the SPR, and like you said, every single week it's a downward curve. And at some point, even with the SPR, you get to a point where they can't pull it out anymore because it just doesn't work. So it's got to catch up with us. And I'm looking at timing. If you were to look at this, I think it happens before the end of the year at the run rate that we have right now that I'm seeing, because demand isn't stopping. And then the other thing, Chris, if I was an Asian country where we were rationing fuel, if they open up the straits, let's say they do and they make a peace deal, I'm sure as hell going to come up with a strategic reserve, because I don't want to be put in that position again. Anybody that's drawn down their stockpiles, whether it's China, whether it's the US, wherever it is, there's going to be a rebuilding. So you're going to see excess demand come into the market as nation states try to rebuild their stockpiles.
Yeah, there's that dynamic, and I think that's going to be pretty robust. And Japan had about 100 days of consumption on hand. Of course, they've been able to get some additional supply since, so they're not burning straight into it. But man, they tucked into it pretty severely. Korea discovered that it was really light on things, including LNG. They had no LNG storage, so they were just hand to mouth, bringing that stuff in, which is another component missing from this Iran war. And then, of course, Singapore is a major, major refiner, but they were very light on strategic reserves. I don't know if they had any. They had commercial reserves, whatever's in the tank farm. So I think all those countries and more are going to be saying, just like you said, we better have a little of this stuff on hand. And then, China's going to probably rebuild its stocks. We're going to have to rebuild our stocks. So I think you have at least 2 to 3 million barrels per day of demand for the next 2 to 3 years just to get back to even in this story, right? So the entire surplus story is just out the window for starters. And then, of course, there's however many barrels are missing because the fields got shut in, and it's very hard, because there's some sneaking out through the Yanbu port up the Red Sea, and you got the Fujairah pipeline, and there's dark ships sort of shuttling back and forth with their AIS transponders off. Who knows what the actual story is? But we had Nasser, the head of Saudi Aramco, came out just last week and said, well, we're short 2.6 billion barrels right now. That's the hole. Just didn't get produced. It's missing. So that's missing. That's the hole we have to fill somehow. And it's a really big number because the world only produces 86 million barrels of crude oil per day. The rest of it's sort of refinery products and fluff and LNG and stuff not LNG, sorry, LPG and other sort of natural gas liquids. Oil, 86 million barrels per day. That's what we produce. That's what we consume. And we were pretty tight on that through this whole period of time. I think reasonably balanced. We're not going to be balanced for years at this rate.
No, and it's something I look at, that, and this goes beyond the war, is the underinvestment. I'm coming out with an article, and I show that if you take over the last decade, there's been an underinvestment by oil companies somewhere in the neighborhood of over $3 trillion. And so oil is consumed. So if I'm an oil company, I'm pushing oil barrels out the front door, I better be bringing oil in the back door, or I'm going to be out of business. And most of the prospecting by these companies have been on Wall Street. Rather than drill for a new, I'll just buy another refiner. I'll buy another oil company. And that to me is something that's going to fit into this long-term rebuild. I think that's going to hit at the same time.
Well, it is. And the underinvestment's been just legendary. It's just amazing how little investment's gone in. Really took a collapse here after 2015 even. It's been a while. So the other thing we have to add to this is that even according to the EIA at this point in time in the United States, the shale basins are about tapped out for oil. The Bakken already passed its peak for sure. Eagle Ford for sure. The Permian maybe has a little room to run, but it's a big basin. But we're down to literally 2 counties, Lee and Eddy counties, and a couple of stacks that are in the play there. Wonderful oil, great stuff. I'm not saying we're running out, but that whole idea that we're going to just pile on hundreds of thousands of barrels per day more production year over year, that story's over now. And I don't see that being factored into the discussion at all. When I hear Trump say, oh, we'll supply oil to the world, I'm like, oh, we're still a net importer of crude oil. We import 6, we export 4. That leaves us net 2. We're still a net importer of oil. And oh, by the way, if the EIA is correct, within a few years, we're going to see this shale just flatten out and then roll over. Where do we want to be when that happens? And we have to think about that. A lot of investment is going to have to happen to retool our landscape to get ready for that. And we're just too short term right now to do anything like that, I think.
Yeah, I don't think that, they buy these stories. The IA puts out these stories, and I think the market is buying the Glut story. That is one reason we haven't had, let's say, higher prices. Excuse me.
Well, there's one other possibility going on here that I've been noodling with for a while is that something's changed in the landscape in the last few years, Jim. And I think it's that the power of AI to shape narratives, the power of social media to shape narratives, it's really become really powerful. So I ask myself, oil traders didn't just become a little bit bearish. They had hit max bearishness for the amount of inventory we have right now. The amount of Brent shorts right now, no parallel to it. There was a period of time. I mean, we are at the 0% level. If you said how much time over history have we been this short on the curve, 50% of the time we're about this short or not. zero. We hit zero in March, late March, right? It's unbelievable. So maximum bearishness during maximum uncertainty and an obvious energy crisis. So the question is, how does that come about exactly?
And I think a lot of it is social media, people putting out stories, and the traders are buying it. And we know, that, quite honestly, the president is quite active on social media. He'll put out stuff that affects the stock market. He'll put out things that affect oil. Hey, we're going to have oil down to $65 a barrel by, the end of the summer, or some other figure like that. And people buy that. If that's what they're looking at and reading, that's what they're trading.
Well, and this was, something Tucker brought up because he read an article by Unz in the Unz review, and it just noted that, listen, there's people out there trading, but most of it's algorithms, right? And so what if you have this new universe where algorithms write the headlines, read the headlines, trade on the headlines, and it becomes sort of self-reinforcing. I'm really concerned that there's a broken market dynamic here where we're missing the usual, what I call checks and balances, like actual humans making reasonable decisions over a longish horizon. It feels so like it's just driven by the latest tweet. It's like this big flurry of stuff. We just saw this. Scott Bessent came out on Monday, said, "Oh, there's a deal coming soon," and boom, $5 off of the price of oil, and it was fast, right?
And
Doesn't
not to
feel
mention,
organic.
Chris, when we have these big sellers coming into market on a Sunday night and a massive amount, that triggers the algos, which trigger each other. So it becomes self-reinforcing.
Mm-hmm. It is. And I would submit that if you were a government agency or somebody and you really wanted to manipulate markets or have prices be set where you think they ought to be, it would be actually, I think, relatively easy to set out a training model to go out there and find out when's the right time. And if I do it here, then that happens. And if I push this hard, this happens, and they learn. And I think we just have to understand there's probably some meta programs running in this whole thing. And that's the world we live in, right? So yeah, we've all learned that these algos are owned by companies that co-locate their servers on the floor of the CME or the NYSE because they need microsecond latency because can't be any slower or faster than that. But something else has been going on in the last year or two in the oil market. And my personal theory on this is that they've authorized wash trading so that one arm of a big entity can sell oil futures to its other arm and takes no risk at that point in time. But it is helping to set the price, right? And wash trading would be deeply illegal if you or I did it, but I suspect that's how they're minimizing risk in this story. Just a guess, but it's what it smells like right now.
Yeah, because you wouldn't want to really short to an open market entity and then get caught when something happens that you can't control. I saw that naked short selling in the '00 decade where they come and do this in the gold and silver markets. And so same kind of thing. Well, I
Mm-hmm.
tell you, we own oil stocks, we own the integrated oils, we own the producers, because I see nothing but the price of oil going up the balance of this decade. And for the number of things that we're talking about, not only just what's happening with Iran, but I think the bigger factor is the gross underinvestment that has been made by the oil industry itself over a decade. I mean, you just can't overcome that. It's not like you flip a switch and the light, and all of a sudden, the oil starts coming out of the ground. That's not the way it works.
No, and speaking of the narrative, the IEA, they've been bearish on oil for a long time, and they've been trying to promote this green narrative, and they've been trying to talk about peak oil demand, and they kept promoting this idea that we'd be awash with electric cars, and that would make a huge dent. And it never quite materialized, and they kept having to up their estimates of oil demand as they went along. But that level of sort of narrative pushing, Jim, got so out of hand that in the UK, they heavily penalized their oil industry with these 30% windfall profit taxes, right? Guess what happened? They stopped drilling, it's where I think the West has seriously hobbled itself on the energy side of this story. And China doesn't have any illusions about any of this stuff. They've got a really elegant master 5-year plan for what they're going to do in terms of total energy, not just oil. And it makes all the sense in the world. If you read it, you're like, oh, yeah, why wouldn't we do this? They say, yeah, we're going to lean on some wind and some solar, but no more than 1% per year, max 12% of our grid. Otherwise, we're doing hydro. They have a project underway right now, which is going to be allegedly 3 times larger than the Three Gorges Dam. And but they said, important part of the plank, we have to maintain good relationships with those countries that sell us the hydrocarbons we need. And so they have a diplomatic plan for how they become friendly with everybody. Now, I think they're playing it the right way.
Yeah, we're following, the president wants to reindustrialize the country, which is a good thing, start making stuff. But to start making stuff, you need two things. You need raw materials, number one. And it's gotten to the point where, we don't have the smelters that China does. They basically smelt most of these minerals. They're even talking, Chris, about putting them on military bases to get around all the environmental studies because you want to get a permit that could take 5 to 7 years. Once you get the permit, you're looking at probably 10 years worth of lawsuits of dealing with that. So not only do you need raw materials, but you also need energy, you need electricity. And as far as I know, maybe you know more about this than I do. As far as I know, I don't think we're building new nuclear plant right now. We did build one new one that's now, I think, online. But I think what does China has like 39 new nuclear plants? They have not only smelters in hub centers, they also have they're looking at building coal-fired plants. As you mentioned, they have the dam that they're working on. They're attacking energy in a smart way. We're not going to rely on one source. We're going to rely on multiple sources. We're not doing that.
No, we're not. And just on the nuclear thing, Japan, had to shut down all of its nukes because of, the Tokushima earthquake in 2011. I think they're starting to bring them on, but China's just going gangbusters. And not the 39 standard units, right? But they also have these small modular nuclear reactors, so-called fourth gens. They're building those out as well. They have the only 2 working pilot plants for thorium reactors right now. That thorium fuel cycle is super exciting. I think it is. I kind of wish we were somewhere in that story. So they're pushing really hard on that end of the story. And of course they should. Now, in the last 10 years, China's added as much electricity capacity as the entirety of the United States has at this point in time. And if you understand AI, if you understand manufacturing, if you understand the role of energy in creating prosperity, it's the lifeblood of it. China understands that, and they're getting more energy flowing through their economy, which means, they're going to win if this is a race.
Well, it's too bad. What would you be telling your listeners, given what you and I have been discussing here and what we see coming in the future?
Well, I think that I tell everybody first, just get prepared, make sure that you have resilience in your own life, really think through how you can manufacture your own energy and food on your homestead. If you have that capability, what have I done? I've bought a lot of batteries, more solar, stuff like that. Not everybody has that capability. I get that. But I do think that we're kind of at the end of a long regime of printing. And I think it's going to become very turbulent. So if you have wealth, make sure it's managed with an eye towards risk management. I think the passive investing period is over, right? Where you just sort of automatically put 3%, 6% in, and every month it rolls in and you buy an index fund. I think that's run its course at this point in time. And some of my data for that is, Jim, I can't make any sense of how these AI companies are going to pay themselves back for their investments. I want to see the revenue model. Can somebody just show me what is it? Are you going to charge subscribers, companies? I can't. It's crazy to me the amount of money that's been tossed at that. And right now, as we're recording this, we're watching long rates creep up, not just in the United States, but around the world. Obviously, the United States did something really goofy with the intervention in the yen, openly selling euros to help support the yen, forgetting to tell our European counterparts we're doing that. And I get the sense now that we're starting to get really concerned, how are we going to fund all of this at the same time? Can we both fund $2 trillion government deficits, and we're watching now all this debt get rolled out by these AI and the hyperscaler companies, right? Another $1 trillion of borrowing there. At the same time, foreigners are backing away from loaning us money. And that, I think, was really what Percent was after, was to try and prevent Japan from having to sell its treasuries and get that ball rolling in the wrong way. But that's sort of the landscape right now. And, we still have close to about an $800 billion trade deficit. That has to be funded somehow. So I see all these different funding needs. And what we desperately need is we need the world to buy our treasuries and to sit on them for now. But barring that, guess what? We're going to print. Interest rates are going to go up. They're going to print some more. That's how I see it right now, stacking out. So everybody's got to be prepared for much higher inflation. And for me, that means I'm not in bonds at the moment. I'm in gold. I'm in silver. I'm in land. I'm in oil. I'm in energy stocks. I'm in real things.
Absolutely. I just see this as a commodity super cycle driven by reindustrialization, AI, and the green transition, all three of those. So, well, listen, Chris, if our listeners would like to find out more about peak prosperity, tell them how they can do so.
Sure. Peakprosperity.com is the main website. And we have a subscription service there for people who like to go deeper, and as well, a lot of free content there. So that's our main website. It's also a community. We have thousands of people who've been inhabiting it for quite a while. It's actually, as far as I'm concerned, the gem of the website is all the intelligent, curious people we've sort of curated along the way. It's a wonderful community. We chat there all day long about all these things. And as well, of course, I'm on Twitter and YouTube and all of that.
Well, listen, it was a pleasure. I saw you on Tucker, and I said, he's talking about what I'm seeing. And so I knew I
You
had
see
to
it
have
too,
you.
though, right? It's just-
Yeah, I see it. It was a pleasure speaking with you again. Don't be a stranger. Come back again.
Thank you. I'd love to.
To speak with our financial planning and wealth management team, visit us on our website, financialsensewealth.com. If you aren't already a subscriber to our weekday podcast and would like to listen to more of our content throughout the week, go to Financial Sense and hit the subscribe button.